All right, everybody, I'm Logan Alec. I'm a CPA. Today, I'm going to be talking about the Biden student loan forgiveness. I mentioned this a couple times before here on the channel. I'm not going to go over all the basics of it. That has been adequately covered, I think, in the mainstream media. Also, Clear Value Tax has some good videos on the basics of the Biden student loan forgiveness program. Today, I'm going to talk about a very specific question, and that is, if you have already filed your 20 and 21 income tax returns, can you change them? Can you update them so that you can get below the income thresholds to qualify for the Biden student loan forgiveness? And the answer is yes, and I'm going to give you some ideas in this video on ways you can do that. Before I get into that, the one thing I want to say is that I do not advocate fraud. I do not advocate making things up, right? Pretending you have all these expenses that you didn't actually have, okay? Before we get into the specific tax strategies here, I'm going to go over a little bit of the basics. I know I said I wasn't going to go into all the basics, but a little bit of the basics on qualifying for the Biden student loan forgiveness. So to do that, I'm going to go to the White House's official fact sheet on the Biden student loan forgiveness program here on my computer. All right, so here's a fact sheet. President Biden announces student loan relief for borrowers who need it most. There's a lot of introduction here about the cost of student loans and the rising student debt balance in the country. Right, $20,000 in debt cancellation to Pell Grant recipients, up to $10,000 debt cancellation to non-Pell Grant recipients. So in terms of the eligibility, it says borrowers are eligible for this relief if their individual income is less than $125,000 or $250,000 for married couples. I take this to mean that this is an absolute cliff instead of the beginning of a phase out, right? So when we talk about income limits on things, a cliff means if you make $125,000, because it says less than $125,000 and you're single, or if you make $250,000 or more, if you're married, or let's say exactly $250,000, then you don't qualify for any student loan forgiveness. That's how I read this. That seems to be the language that's implied here. It doesn't sound like at this point that this is a phase out, right? Where if you make a little bit above $125,000 or a little bit above $250,000, you might get some lower student loan debt relief, like instead of $10,000, maybe $9,000 or something, kind of like maybe a dollar for dollar decrease or 50 cents on the dollar decrease. Doesn't sound like that's what's going on here. Because it uses some pretty strong language like no high income individual or high income household, and the top 5% of incomes will benefit from this action. This could change, of course, right? They could come out and make changes to this, but that's just what we're seeing right now. And we know from additional information that's been put out by the government that this $125,000 and $250,000 is going to be based on your adjusted gross income on your 2020 or 2021 tax return. Okay, and that's what I'm going to be talking about the rest of this video. You only have to qualify based on your income for one of those years. So if you had if you're single and you had an income of less than $125,000 in 2020, and then you made $1 million in 2021 for your AGI, you'd still qualify, right? At least that seems to be what we think is going to happen, just based on what we've seen so far, right? So the question becomes, well, gee, I already filed my 20 and 2021 tax returns. Can I change those tax returns now to qualify me for the student loan forgiveness? Let's say you made like let's say you're single and you made $126,000. You're like, oh my gosh, like if only I would have, had a slightly lower AGI, I'd qualify for this forgiveness, right? And the answer is yes, there are some things that you can do. Obviously, you cannot commit fraud. And I'm going to be kind of referencing this article here in Forbes. Can you lower your income to qualify for student loan forgiveness? And the reason I'm okay with doing this is because I actually personally provided like a lot of the information to the writer of this article. You can see I'm kind of quoted throughout the article, and I basically gave maybe not the majority, well, probably the majority of the information for this article in Forbes. So basically how it would work is there's kind of two categories of ways you can change your tax return for a given year. One is to correct information on an old tax return, right? So, let's say you own a small business and you didn't really keep good books for tax year 2020 or 2021, right? And you just kind of finish your tax return just to get it done, but you didn't really record all your expenses, keep track of all your expenses. You can go back, right? Clean up your books, which I definitely recommend you do if you have a small business, right? Track all of your expenses, all your ordinary necessary business expenses. Maybe look at your how you calculated the mileage in your business. If you just use the standard mileage rate, may have made more sense to use actual mileage rate. If you just took the simplified home office deduction, may have made sense for you to use the actual home office deduction method, right, where you actually allocate your expenses based on your business use of your home, right? So things like that. Those are things where you're actually correcting a mistake. What is this? Correcting a mistake made on your old tax return. So you're basically correcting some information that was incorrect on your old tax return. I gave an example of a business person not reporting all their expenses originally, right? Because those business expenses will reduce their AGI, their adjusted gross income. If you don't know what AGI is, it's basically the sum of all of your taxable items of income on your tax return, wages, taxable interest, dividends, retirement account distribution, Social Security, taxable Social Security benefits. Not all Social Security benefits are taxable. Depends how much other income you have. Capital gains, and then there's other income on Schedule 1 in part 1 of Schedule 1. You can kind of see the list of them here. And then you take that total taxable income that you have and you subtract certain adjustments to your income. Right, these are things that help you out. They reduce your adjusted gross income. Educator expenses, health savings account deduction, moving expenses for members of the armed forces, deductible part of self-employment tax, yada, 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 right? Your traditional IRA deduction. And then all those numbers add up to your adjusted gross income. So on your 2020 tax return, this would be line 10C, line 11. So your adjusted gross income on your 2020 Form 1040. On 2021, it is line 11 again. So your adjusted gross income. So those are the numbers that your eligibility for the Biden student loan forgiveness will be based on. Like I said, you only have to qualify. You only have to have income under $125,000 if you're single, under $250,000 if you're married and filed jointly, in one of these years, right? So you can make $1 million in the other year, but if you qualify for one of those years, you will be good. And business expenses, right? Expenses you incur in your business do reduce your adjusted gross income, right? Because if you look in Part 1 of Schedule 1, when you fill out your Schedule C, right, or if you get a K-1 from your S Corp or something like that, and you're able to reduce that, then that flows through, right, to Schedule 1. So if you reduce your Schedule C income, reduce the income from your S Corp on the K-1 or whatever by amending your return, then you will effectively be reducing your adjusted gross income when you correct for those mistakes. Now, I will mention one thing here. Technically, if you have filed an extension for your return and you make this correction before the extended deadline for your return, October 17th, 2022. This is only for 2021, by the way. If you filed an extension for 2021 and you're going to make this change before October 17th, 2022, then you would technically file what's called a superseded tax return, as opposed to an amended tax return. A superseded tax return is basically just replacing your originally filed tax return. But if you're going to be changing your 2020 return, you have to do an amended return. If you're going to be changing your 2021 return now and you did not file an extension, right, you'd be doing an amended return. And if after October 17th, right, even if you got an extension for your 2021 return, you'd be doing an amended return. Kind of a technicality. I go over it in the Forbes article here. I'll link it in the description below, kind of what the distinction there is. Also, this article, I talked about checking past returns for accidental omissions. I don't think I talked about that when I was helping the writer. I don't think they quoted me specifically for that though. But now, so there's other changes you can make as well though, right? Even if it's not a correction of a past mistake, there are some things that you can do now, right? Especially if you have a small business, to lower your adjusted gross income on your 2020 or 2021 tax return. So an easy one for 2021, if you're a small business owner, is to make a SEP IRA contribution. I talk about that in this article. I think I do. I don't know if they left it in somewhere. So if you, a SEP IRA is basically a retirement account for small business owners, and the amount you can contribute is based on a percentage, 20% or 25%, depending on how you structure your business, of your net business income, right? So, and the maximum is like 50 some $1,000. Let's look it up. Right, so the SEP IRA limit for 2021 is $58,000, right? Now, that doesn't mean you can contribute $58,000 to your SEP. You have to qualify based on the percentage of your net income. But if you're making a lot of money in your business, you had a high net income in your business, you could potentially contribute tens of thousands of dollars, up to $58,000, to your SEP IRA. And that SEP IRA contribution would reduce your AGI. If you make the contribution, if you set up the SEP, or if you already have a SEP, make the contribution to the SEP. And if you don't have a SEP, set up the SEP, make a contribution to the SEP by October 17th, 2022. Caveat being, you must have extended your tax return, right? You must have filed for an extension for your 2021 tax return. Unlike traditional IRAs and Roth IRAs, which even if you filed an extension for your tax return, you only have until the original due date, April 15th or whenever it was, to make that contribution for the previous year. With a SEP IRA, it follows the extended due date of your return. So if you filed an extension and you're eligible for a SEP contribution, and you haven't made it yet, and you didn't report it on your 2021 tax return because you hadn't made the SEP contribution for 2021, you can still do that before October 17th. This is only eligible for business owners. Yes, I'm sorry, folks with W-2 jobs. There are benefits of having W-2 jobs, but if you're a business owner, the tax code just opens up a lot more savings opportunities for you. So that's one idea. There are, now, of course, just because you can make a SEP contribution doesn't mean it's necessarily going to get your AGI below those amounts, right? So I would recommend you contact a local tax professional to give you guidance on all these strategies, right? I'm speaking in general terms. Not all this will apply to everybody's situation. You want to make sure you're not doing anything you shouldn't, or doing something wrong or incorrect that the IRS is going to come after you for. Another thing you can do, I mentioned this in the Forbes article, is that you can, this is more technical, but if you're a business owner, you can do what's called a 481A adjustment by filing a Form 3115, basically changing the way that you've accounted for something in the past. And if it's a negative 481A adjustment, right, one that will reduce your income, right, overall, you can take that adjustment all in the year of the change, right? So, if you were to do an accounting method change for 2021, right, and it resulted in a loss, you could take that 481A adjustment on your 2021 tax return. Okay, in order to do that, you have to file Form 3115 and all these things. It's a fairly technical thing. It's a bit more technical than just setting up a SEP IRA and contributing to it, but that is one option for you there. So in this article, this guy from Betterment brought up some ideas too, right, about correcting for past errors. If you omitted business expenses, rental expenses, certain capital losses, and to that I would add capital loss carryforwards. A lot of folks, when they change tax preparers or they change tax software, they don't report, or they don't type in, to that new tax software, the capital loss carryforwards they have carrying out forward from the previous year, right? So watch out for those. If you didn't report an IRA contribution, they brought up SEPs here, health savings account contributions. Obviously, you cannot make like a traditional IRA contribution for 2021 anymore, right? But if you made it and you were eligible for the deduction and you didn't report it on your 2021 tax return, that's obviously grounds to change things up. Like I said here, don't fudge the numbers just to qualify for loan forgiveness, even if it's tempting to do so. I said even if your AGI is a little bit over these amounts, or you're not sure if there's any more opportunity for you to reduce it further, consider reaching out to a tax professional who can give you a solid answer and do what they can to help you out. So that's my take on this. People have been asking me this: can I change my tax return to qualify for the Biden student loan forgiveness? I say yes, you can if it's legitimate. So, folks, thank you so much for watching this video. So I hope this video is helpful. I'm just a CPA, a tax nerd, trying to lend out my sometimes esoteric tax knowledge for the greater good. This channel is going to be mostly about tax topics going forward. That is my my forte. That is what I'm an expert in. I'm obviously talking a lot about tax relief because that's my business, Choice Tax Relief. We help folks who owe $10,000 or more to their IRS or state governments reduce their tax situation. So that's really what I'm going to be focusing on the channel. But of course, taxes have an impact on all aspects of our lives, right? Maybe not all, but many aspects of our lives, like with student loans, for example. So talking about the interplay of taxes and kind of other things that are in the news is always quite interesting to me. Thank you so much for watching, everybody, and I'll see you in the next video. Bye-bye.